So finally we have some good news on the Australian consumer. The Westpac Melbourne Institute Consumer Sentiment Survey for February showed a solid 6% rise. That's the best response month to month that we've seen since April last year, and it takes the index level to its highest point since June 2022. And there was a lot to like in the detail. While that's 86 readers still pessimistic, there's enough in the detail to suggest we're starting to move in the right direction here. All 5 of the index components improved in the month, but the main gains came around buyer sentiment. Assessments of whether now is a good time to buy a major household item have been extremely weak over the last 12 to 18 months and have really captured a lot of the cost of living pressures that are bearing down heavily on the consumer. So that improvement breaks it out of that very weak level, suggests we may be starting to see some easing up in those cost of living pressures, and maybe that's a steer towards an improvement over the medium term. There was also a significant lift in expectations for the year ahead, particularly around the economy. We saw there that prospects of inflation coming under control, looking a little bit more confident there, perhaps allowing the RBA to ease rates down the track. And of course, the prospect of tax cuts in July seemed to be getting more traction. Interestingly, when asked about their own family finances for the year ahead, we saw a more muted gain. We saw some solid rises amongst lower and middle income households where the stage 3 tax cuts have been rejigged to give more benefit, and a bit of a give back in the higher income groups. But generally speaking, that again sort of suggests we're starting to round the corner on sentiment, and that some of the gains that we're seeing could be well sustained. Well, of particular interest, we saw a big swing over the course of the survey week. When we divide the survey up into those we surveyed prior to the RBA decision and those we surveyed after, we saw a very positive lead into the week. I think perhaps consumers were expecting a more positive message from the RBA around progress in the fight against inflation, perhaps scope for rate cuts, and that gave back quite sharply in the second half. The reading across those surveyed prior was 94, so materially higher than the 86 we got for that survey as a whole. So that suggests to us that if and when this inflation story does finally come under control and we get a very clear signal from the RBA, then we could see sentiment recover quite well. Interestingly, the RBA's actual decision looks to have been largely expected, the no change decision on rates. And the decision itself didn't change consumers' expectations for interest rates, which improved significantly compared to January. In fact, consumers are now pretty much 50-50 on whether we see another rate rise or whether rates stay on hold or move lower over the next 12 months. That's quite a big turnaround from where we were 3 or 4 months ago. So consumers less fearful of rate hikes, starting to come around to the idea that we may see cuts, and seeming a little bit more positive about the year ahead. So the bottom line is we're still at quite a weak level for sentiment. Spending is still likely to remain quite restrained near term and weakish. But the detail is starting to point to a move in the right direction, that once we can draw a line under the inflation threats and start to see some policy easing, then we should get more traction around confidence and a bit of a lift. In terms of the RBA's view, that's actually pretty positive. It's telling them on the one hand that restrained demand will continue to assist in bringing inflation back under control, and that if and when they choose to pivot, they should get pretty good traction with the consumer in terms of sentiment, and that'll support demand.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.